Good morning. It's the 22nd of April. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Jamie Pakenham-Walsh and Steve O'Hare. Good morning, gents.
Morning, mate. You right?
Morning.
Yeah, feeling all right?
Yeah, feeling tippity top.
Hey, good. Last trading day of the week, unless obviously you're a crypto trader, then there's no off button. But we'll certainly be taking a break for a couple of days, that's for sure. Let's get stuck into the latest headlines. It was a bit of an action-packed day yesterday with a number of commentators coming out and influencing the markets. So the latest headlines are here on the screen. First up, we had hawkish Fed rhetoric continuing yesterday. The San Francisco Fed President Daly stated that the central bank needs to get interest rates to 2.5% by year end, and that the central bank was likely to raise rates by 50 basis points at a couple of meetings. Fed Chair Powell stated that it was appropriate, in his view, to move a little more quickly on interest rates, and that a 50 basis point increase will be on the table for the May meeting. And this spooked markets initially. We also saw the latest Philly Fed inflation reading, which came in at a 42-year high. The manufacturing index declined to 17.6 for April from 27.4. The inflation pressures remain very strong, with the prices paid index increasing to 84.6, which was its highest reading since June 1979. The US yields again moved higher off the back of what we saw yesterday from the comments from Daly and Powell. There was a fresh increase in yields, with the 10-year rate peaking again around about that 2.97 level, just below the psychologically important 3% zone. There was further speculation over yen intervention as well. The finance minister, Suzuki, from Japan, held talks with his US counterpart, Janet Yellen, and stated that there would be close cooperation on FX rates. There was some speculation that the US would be prepared to intervene in markets, which triggered a fresh element of caution over selling the Japanese currency. In terms of what's going on with the Bank of England, we had Andrew Bailey speaking yesterday. He stated that the bank is treading a very tight line between taming inflation and heaping greater woe on the economy, with trends in the labour market likely to be crucial. Data this morning from the UK consumer confidence number was a little bit weaker than expected. It was its second lowest reading on record. Retail sales posted a 1.4% decline for March and a 0.5% decline for the previous month. And then finally, we are looking ahead to the presidential runoff in France on Sunday. The second round of presidential elections will be held this weekend. Opinion polls suggest a comfortable win for Macron, and it'll be a surprise if Le Pen is able to upset the opinion polls and triumph. A Le Pen victory would see sharp selling on the euro, according to analyst expectations. So that's that for the news. A fair amount going on. And obviously, as a result of that, we have seen some pretty significant moves in certain markets. Steve, would you like to kick us off this morning?
Yeah, of course. Now, let me see. Am I sharing the screen? Yeah, you're right. You're here. Cryptocurrencies. I'm going to take a little look at cryptocurrencies this morning. Different ones, rather than just Bitcoin. Let's take a look at ones that look pretty good on the technical side of things. The one that really pops up for me after scanning, we have about 30 or 40 that we look at, and Theta. I get this is Theta against.
Is that the one linked to NFTs?
No, I don't think it is. That's Ethereum, isn't it?
I think so. Ether. I think Theta had something to do with it as well, maybe. I'm not sure.
Very possibly, but yeah, from a technical perspective, first of all, we look at the weekly chart, and it's posting a pretty positive week, maybe against a lot of other cryptos. And we've seen a bottom here around about the 230. That's a serious level that we've got to watch on the long-term basis. And we're actually close to posting a bullish outside candle for the week, which will be pretty positive for price action. On the daily chart, we can see yesterday did post the last couple of days, 2 out of the last 4 days have been bullish outside or bullish engulfing candles. So the reaction from 276, which is a closer support level, has been pretty decent. So there's resistance at 360, and we're trading at 346 at the moment, just below that 360 level, and yeah, looks positive for the short term. And if we look at the 4-hour chart, we can see that sort of like the shaping of a head and shoulders formation, inverse head and shoulders formation, something like this, which really has come back, broken the neckline, come back, retested the neckline, and has projected higher. Now, a measured move target would take us all the way up to there, around about 368. So looking pretty positive, and a nice bottoming formation on theta. So could look at that for gun to head challenge, but I'm not going to give my secrets away. Also take a look at the commodity sector. We saw news out yesterday which caused a spike in oil prices. I think it was it Powell speak about something?
Daily, yeah.
Daily. And this caused a reaction on oil as well. Nice spike out on my gun to head challenge, got stopped out unfortunately, and it's back to where it started. So from a technical perspective, you've had that spike to the upside, price action come back, and it's retested now. Support coming in around about 102 level on WTI crude oil, and that support level in Brent crude oil is around about the 106.50 level. On gold also, it seems to be retaining some upside momentum. Last couple of days we posted bullish hammers, so there is a positive spin on this to the upside as well. If we manage to break above resistance at 1960, we could take another look at that $2,000 level. On the downside, really support coming in at 1937. Below that, we're looking at 1890 to 95. That's me on the commodities.
Nice. Okay, so there was a bit more action going on in FX and indices yesterday. Let's first of all take a look at dollar index. We saw some support coming for that yesterday. We can see here quite a decent reversal. So there was a fair amount of weakness early on in the session, but the comments from Jerome Powell and Daly have sent dollar higher as more demand came in for that as a safe haven. So obviously still looking pretty strong overall and expecting higher prices. The next resistance we've got up here is at 101.38. We have seen a sell-off in some of the commodity linked currencies, notably in Aussie. As we can see here, Aussie CAD, fair amount of weakness there. Aussie Yen, quite interestingly, that's reversed a little bit as a result of the conversation between the Japanese finance minister and Janet Yellen. Aussie dollar, we've seen a break of the bullish channel that had formed. I was looking at this yesterday as being maybe one that was bouncing from the lower end, and a reverse on the reverse side of this broken trend line. But we seem to have moved lower, engulfing all of the previous day's gains that we saw, gains we saw on the 20th of April, and backing up with further declines today. If we take a look at euro versus the US dollar, we can see a sharp reversal here in line with what we've seen on the dollar index. Still holding on to this kind of support zone really around 107.58. We're seeing sterling getting a bit of a whack this morning off of the numbers that came out today, the consumer confidence and the retail sales. If we take a look at cable, we can see that that is down by 0.9%, taking out these lows here at 1.3000. So quite a significant number. And looking very weak as things stand, down almost 1% as things stand at the minute. We've got a 50% fib level here at 128.46, and that looks to be where prices are headed in the short term. So no let up on that as things stand. We looked yesterday as well at sterling yen on the gun to the head. We kind of called a bit of a top on that in the short term, which seems to have worked quite nicely. I didn't actually make that much on it, but we'll come on to that shortly when we go through the gun to the head trades. Now, looking at some of the indices, we can take a quick look at Aussie, the Aussie index, the ASX 200, highlighted this band of resistance on the daily chart, which continues to do a job and reject higher prices. So we've seen a bit of red over the last couple of days, and there is potential maybe for a bit of a deeper correction on that. If we take a look at the German market, That rallied yesterday, but failed into this downtrend resistance line, posting a bit of a shooting star candle yesterday. So in a fairly strong reversal been seen there. Mixed bag today, only up by 0.1% as things stand. If we take a look at the US markets, we were talking about the prospect of an inverse head and shoulders taking shape. It was highly speculative because it was only maybe in the initial stages of doing that, but it took out the 61.8% fib level and the support that I had there, which was where I was calling the right shoulder to have started forming. But we've broken below that. A big reversal yesterday. We still can't rule this out because it may be that it goes down to maybe the 78.6. As long as it doesn't take out this low, then there is still the potential for that to take shape. But it remains under pressure at the minute, and obviously been pressured by these comments that we've seen yesterday. Similar situation for the S&P, although it hasn't taken out the low there at 43.61. So maybe looking a little bit more robust than NASDAQ at the minute. And finally, just to finish off, we'll look at the Ftse 100. Like the Aussie market, it's bang into a resistance level, and it seems to be being rejected at this moment in time. A fairly sharp sell-off posted yesterday, but Ftse is doing a pretty good job of recovering some of that already today, up by 0.7% as things stand. That's it from me. Jamie, over to you on the stocks.
Cool. Thank you, Joe. Today we will be starting with the biggest winner and biggest loser series. Let me put up my screen. Here we go. The biggest winner on the day yesterday was this, I think, Syngin. Oh, I can't scroll there. Yeah, Syngin, which is up 96.3%. And the headline for this was Syngin launches Drive Mod Kit, a fully equipped autonomous vehicle hardware integration module. Don't have too much more to say about that. Obviously, we had this big move up yesterday on this news, a huge gap up. But not a lot technically that looked particularly bullish about this beforehand. This was just a pure kind of a reaction to an announcement. We did have a bit of a channel forming on the downside. Now it's kind of broken above that. I think looking at this from a technical perspective, bulls of this stock would be looking for maybe a retest of this level. I mean, there's not really much data here to go off, but it did actually come right back into this level before moving higher as well yesterday. So a nice move there for Syngin. The biggest loser on the day is this, and I've found quite a fun headline on this. This is Voyager Therapeutics, and the headline I've got is, and this was written at 12:30 yesterday afternoon. So just before the market opened, it says Voyager Therapeutics moves 5.8% higher. Will the strength last? Apparently not. It's down 28% on the afternoon. So, and this clearly a very bearish looking candle. It's not just an engulfing or an outside. It kind of engulfed the prior however many weeks trading. So, not looking so good. And you can see the volumes really up there as well. So, yeah, it doesn't look like the strength will last. But I mean, who knows? We'll see how that one develops. Looking to some of the more well-known stocks, we'll dive into. I mean, you can see here just a sea of red yesterday for the US stocks, but we'll start with Disney. I think we looked at Disney recently, but we had this descending triangle formation. This is kind of an example of where technicals do play quite nicely, but also an example of how the market likes to play with people and mess around a bit. Because I think initially we looked at this break here on the 18th. You can see it broke through this previous support. But then we had this move higher, and I think this might have just taken out. You could have had the stop a little bit higher above this level here, but I think we had quite an aggressive stop and it got taken out. But we still liked it, and we managed to get back in, and that now is moving towards its target, which would be 2/3 of that descending triangle. So we can take that, measure it like this. Probably isn't the best way of doing it, but you're kind of aiming for down here. So our target's a little bit short of that. But a nice move that looks to be playing out there. Where should we go to next? We saw Tesla had its earnings yesterday and day before yesterday, sorry. And that was the only stock that kind of held up to an extent, just purely for the fact it gapped higher on its earnings. But even that had a very negative day on some big volume as well. So there wasn't much that really survived the sell-off yesterday. We'll jump into Nvidia, which I think, this is one where we tried to get long at this, what was a support level, but we didn't have the reaction we wanted, and we got stopped out on that. So if I just move this across, what I like to see personally when we get to these key support levels is an instant kind of reaction from the bulls. And this, we touched it, we kind of hung about, we started moving up, we couldn't get any momentum going. So this one always looked like it was doomed after we didn't get that initial reaction. I'll quickly try and pull up an opposite example of this. I don't know if I've still got the idea here, but this is grab this. So this is BNP Paribas. Yeah, I'm not exactly sure what the stock does, but you can see when we got down to this level, we did have it's a bank. Ah, thank you. But yeah, we had this instant kind of reaction and then move higher. I think this one actually we have hit profit on the idea we had, but this compared to Nvidia, where we saw that hanging around the key level, this had that reaction. It's moved higher quite nicely. So that's kind of what I look for when going for that particular type of trade. Not too much more to report on. We'll quickly jump into Snapchat, because Snapchat did have its earnings yesterday, and maybe we can pull up the corporate calendar in a second to segue from this. But on the day, I had quite a bearish day, as did a lot of the US stocks. But we had this really interesting when earnings did come out, which I think were it kind of under. It missed what its targets were, but we can drill into that in a sec. But we had this really crazy doji looking candle on the 4 hour. I'm not sure we can see that clearly, but just here. Whereby it dropped, I believe, and we can have a look. So in this 4 hour trading period, it dropped 23%, but it also made 10% higher and ended up closing pretty much exactly where it started the period. So a bit of a weird indecision candle from there. I mean, that's what dojis represent. We don't know if the bulls are in control, the bears are in control. In the grander scheme of things, we can see that Snapchat is still in this longer term kind of downtrend or retracement, however you might see it. So my bias is still to the downside for Snapchat, and I think we'll be targeting at this stage, if we go out to a weekly chart, probably these levels around here, this kind of 25 level. I think that's the next realistic target, and I think we're at now at 29.70. So I wouldn't be surprised if we started heading down there in the kind of next few trading sessions, but we'll leave it on stocks there. Nothing looking too good though as of yesterday's trading.
Cool. Thanks, Jamie. Just a quick one on that Snapchat. So this is the earnings calendar yesterday. So they posted after market close, and we saw them come in worse than the analyst expectations. So previously they come in at earnings per share of 0.01. The analyst expectations were for a minus 0.18, and they came in at minus 0.22. So a 22% downside surprise there on the numbers. And that's the first miss they've had in the previous 4 quarters. So yeah, interesting. Okay, gone to the head trades from yesterday. So just to familiarize everybody, we look at trade ideas live on the video, and we come up with where we believe there is potential for some value today. Each of the ideas that we come up with must have a stop and a target. All the ideas are placed at market and published on our TradingView account. The trades will expire at 9 p.m. UK time, or when the stop or the target is hit, and we maintain a performance spreadsheet to let everybody know how we're doing on these calls. So yesterday, we can see here are the 3 trades on our TradingView account. Steve was selling crude after a really successful day previously, where he made 3.5 hour. Sadly, not to be repeated, got spiked out there around about 3 o'clock in the afternoon. Jamie, you were selling sterling Swiss into that big resistance level, as we can see. And if we look how that played out, sadly, you were stopped out as well. But there has been a big move to the downside on that following the data that was out this morning for sterling. And we also sold sterling yen, which was our only winner on the day, but it was only 0.9R at the 9 p.m. close, and as you can see, it's really started to pick up a bit of steam. So if anybody did follow that and is still in it, then they're probably looking quite pretty at the minute. But for the sake of our game, that was only a 0.19R winner yesterday. So 3 more trades to be picked today to end the week. Who wants to go first? Don't all rush.
I'm not so cocky anymore, am I? I'm not sure.
Jamie, I can see you're ready.
Yeah, I mean, I've kind of got something. And it's kind of going off the logic I just talked about for Nvidia and BNP Paribas. We come into this support level. This is Ripple that I'm looking at here. And we've come into this support level, and we've not had a great reaction. We had this quite an extended sell-off, and it was quite an aggressive one yesterday. And the fact for me we haven't had that bounce suggests to me there could be further weakness in cryptos. Oh, I'm gonna get so much hate. That's quite exciting.
Yeah, you will.
So, I mean, I was thinking about kind of selling Bitcoin. I thought that'd be a step too far, but no, I think there is scope for a lower move today. I really do. And this is kind of a flag type pattern forming. So we've had this set off. We've got this consolidation now, and I'd be looking for a move lower. So we're going to sell Ripple at 0.7310. We're going to take our profit at 0.6899, and our stop level will be at 0.7427 for a 3.5 risk reward. So we'll go with that and see how we get on today.
Lovely. Good luck, mate. I'm going to take a look at Euro US dollar. So I wrote our analysis on this today, and it's pretty much just triggered. So I'm going to back my own idea on that and see where we go. So looks to be forming a little bit of a bottom in my eyes in the very short term. We can see maybe some rounding formation taking shape here. We have obviously seen a big slide lower over the last 24 hours or so, but if we take this low here to this high and draw on some fib levels, we've got 78.6% level in blue here, which has just been tapped over the last hour or so. So I'm going to buy that now at a price of 108.05. I'm actually going to go a little bit more aggressive with my stop. This is the stop I've got in the intraday analysis that we've written, but I'm going to go there at 107.80, which is just around 25 ticks, and I'm going to target a move up to these previous swing highs at 109.35, which is 5.27R that I'm looking for today. So I'll get that published up on TradingView now. Steve,
Nice one.
over to you.
I'm going to take a look at silver. And after talking about gold very briefly, picking up these bullish hammer candles on the daily chart, which look quite positive for it. However, we still need to sort of like get above the 1960 level. So until we do get above there, there is more risk to the downside. If we look at silver, it looks a little bit more negative. We've seen the bearish engulfing candle on Tuesday, bit of indecision Wednesday, Thursday follow through to the downside, and Friday off to a bit of a rocky start, already down 20 odd cents on the day. So that's trading at $24.40. On the hourly chart, we can see we've just broken through this support, so potential for further downside. Really potentially targeting a move back to around about $24. So I'm going to sell this on my gun to head challenge at current levels. Just getting in here, and I'm going to bring my stop. I'm going to be quite aggressive with the stop actually, just to get a little bit more to the downside. The hourly high is at 24.45, so I'm going to put my stop. I'm just going to give it 10 cents and look to take 35 cents out of it, so 3.5 to 1 risk reward on selling silver. Now that's me. I'll publish that.
Nice, thanks, Steve.
Nice
Good luck with that. Okay, just looking at the data that we've got out today then quickly to finish up the week. So we've already had the German PMI index numbers. We've also had some UK numbers already, but we've got another round of data due in around 17 minutes. We've got the UK PMIs, which is a flash reading. And then at 2:45 UK time, we have the US PMI index number 2. Over the weekend, as mentioned, we've got these French presidential election runoffs, so do be careful if you are holding any euro exposure going over the weekend. On the 27th, we've got Australian consumer prices, and then on the 28th of April, we've got the US GDP number for the first quarter. Anything else, gents, to add before we wrap this up for another week?
No, nothing else to add.
All good from me.
Excellent. We'll have a great weekend, everybody, and we'll be back next week.
Cheers.
Bye-bye.